Gentlemen, good afternoon once again. May I introduce you to the management team from Maruti Suzuki. Today we have with us our CFO, Mr. Ajay Seth, Senior Executive Director Marketing and Sales, Mr. R.S. Kalsi, Executive Director Corporate Planning, Mr. A.K. Tomar, Senior Vice President Finance, Mr. Pradeep Garg, Vice President Corporate Planning, Mr. Rahul Bharti, Vice President Finance, Mr. Sanjay Mathur. The con call will begin with a brief statement on the performance and outlook of our business by Mr. Seth, after which we will be happy to receive your questions. May I remind you of the safe harbor? We may be making some forward-looking statements. They have to be understood in conjunction with the uncertainty and the risk that the company faces. And I may also like to inform you that the call is being recorded and the transcript will be available at our website. I would now like to invite CFO Mr. Seth. Over to you, sir.
Thank you, Nikhil. Good afternoon, ladies and gentlemen, and welcome once again to Maruti Suzuki's conference call. I'm happy to share with you that coming February, the company would launch the all-new Swift, a car that had crossed 5.8 million sales globally and 1.7 million sales in the country since launch. The iconic Swift, which continues to feature amongst the top 5 best-selling cars for over a decade, now comes with a brand new design. I am hopeful that the new generation Swift would further strengthen our strong product portfolio and would be able to meet the demand and aspiration of the ever-evolving customers. Coming to the third quarter performance, while the passenger vehicle industry posted a growth of 6.1%, the company could once again outperform the industry and posted a growth of 11.7%, taking the 9-month domestic sales growth to 15%. The growth was largely driven by compacts and UV segment. Petrol segment, following the trend for last few quarters, continued to grow faster than the industry growth. The decline in diesel sales in passenger car segment largely indicates the high preference now being accorded to diesel in primarily utility vehicle segment only. For the company as well, petrol segment grew by 13.8% against 6.8%. Growth in diesel segment during the third quarter of the current financial year. While there was a slight decline of 1% in the export sales, it is expected to be covered up in the subsequent quarters to meet the exports target. The net sales and profit in the third quarter of rupees 189,400 million and rupees 17,990 million registered a growth of 13.9% and 3% respectively over the same period last year. Increase in the share of company's higher segment models, cost reduction efforts, slightly lower sales promotion, and marketing expense contributed to growth in profits. It was partially offset by the adverse commodity price movement and lower non-operating income during the quarter. The board discussed and approved a revision in the method of calculating royalty, which would result in lower royalty payments for new model agreements starting the Ignis. This would be implemented after approval by the board of Suzuki Motor Corporation. We can now take your questions, feedback, and any other observation that you may have. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the... Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Raghunandan from MK Global. Please go ahead.
Thank you, sir, for the opportunity. Can you please explain the revision in method of calculation for royalty?
The revision is yet to be approved by the Suzuki board, but we are looking forward to a reduction in the royalty for new models starting the Ignis. And whenever the details are available, we'll share with you.
Understood, sir. Also, can you explain the fall in other income?
So, in this quarter, the there was a sudden increase in interest, government GSEC rates and government bond rates. Especially you saw the spurt in the month of December. And therefore, now as per the new accounting standards, you have to mark to market your entire portfolio. So therefore, there was a capital loss on account of mark to market, which we had to take into account. Though it is notional and it will keep changing based on where the interest rates move going ahead. But we had to take a mark to market provision of 313 crores in this quarter. That's the reason for non-operating income to be lower.
Thank you, sir. Just one last query. Led by the lower Kharif output, is there any near-term weakness expected in rural demand? Do you expect recovery closer to Rabi harvest? And if you can share rural-urban growth, it will be helpful. Thank you.
Well, rural growth so far has been quite robust, and we are at 19% growth year on year for rural markets. And if we talk about our overall growth, it's at about 15%. So rural growth is ahead of urban growth, and I think the momentum is going to continue.
Thank you, sir. I'll come back in queue with more questions.
Thank you. The next question is from the line of Deepika Mundra from JP Morgan. Please go ahead.
Good afternoon, sir. Thank you for taking my question. So my first question was, what was the royalty amount in this particular quarter?
We have, for the quarter, we are at 5.3%.
Fine. Okay. And sir, would you be able to quantify in terms of what would be the royalty on Ignis and the other models as per the revised formula?
So as we said that once we finalize and get the final approvals from the board of Suzuki, we will share the details with you at that point in time.
Okay. So secondly, just wanted to understand how is the ramp up of the Gujarat plant progressing, and in terms of so far margins have been fairly robust. So is the vendor localization program also on track?
We are happy to inform the second shift in Gujarat plant has started, and we are doing a run rate of about 20,000 per month. For this next question.
The localization program is running as per our target, and we are hopeful that this is a time frame of about 3 years in which we will have bulk of vendors moving in there, and it is going as per what our plan is in terms of vendors moving into Gujarat.
Okay, sir. Thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal. Please go ahead.
Hi, sir. Congrats on good sets of numbers. Can you indicate what was the discount level in this quarter?
This quarter, the discounts were at 17,900.
Okay.
It was higher than quarter two, because quarter two we were at about 15,200.
Right.
So shade higher than quarter two, and typically in quarter three, discounts tends to be higher than quarter two.
Right. Fair enough. And secondly, in terms of Gujarat plant, any sense on what kind of contribution was there from Gujarat plant in terms of volumes in this quarter?
Can you repeat the question, please?
Production of Gujarat plant in this quarter?
This quarter was 34,000 units.
34,000 units.
Sorry. I stand corrected. 36,000 units.
36,000 units. Okay. And lastly, Gujarat plant phase 2 is on track for 3QFY18, right?
Yeah, it is. It is for January 19.
Okay, understood. Okay, sir. Thanks and all the best. I'll come back in queue.
Thank you. The next question from the line of Amin Prarani from Deutsche Bank. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. So just going back on the royalty question, just a clarification. Would this reduction in royalty be applicable to all new models, or will there be some correlation with what R&D are you doing and with respect to which model will it be, or will it be like a blanket reduction for all future models?
It will be a reduction for all future models,
And obviously, any R&D work done in India has to be adjusted suitably.
Okay. Okay. So, I mean, in that sense, I mean, should we expect that CapEx outlay for you in the coming years, especially on R&D, could increase materially? Is there any timeline for that, or I mean, how should we look at it?
See, CapEx, we are setting up the Rohtak R&D center out for a total of investment of 4,000 crores, out of which 2,000 crores is done.
Okay.
And 2,000 crores needs to be done further. And there are many more areas of investment, for example, new model, tooling development, etc., which will continue into the future.
Okay. Okay. So the guidance for this year at least remains at around 4,500 crores, right?
4,000 crores.
4,000 crores.
Yeah.
4,000 crores. Okay. Okay. So that's helpful. And so secondly, just on your capacity. So, I mean, do we have an indication of what can be the growth for next year based on just capacity? Obviously, demand environment may change, but based on capacity, what can be the growth that you can do in FY19? Do we have a sense of that right now?
Generally, Maruti effort is that we try to meet the market demand as far as possible, and this will continue even this year also. We are quite confident.
Okay. Okay, sir. Okay. Thank you. Thanks a lot for the opportunity.
Thank you. The next question is from the line of Suraj Chheda from IIFL. Please go ahead.
Hi, this is Joseph. My question is in relation to the definition of new models or new agreements. So, for instance, the new Desire and the new Swift, would that also be considered as new models for the purpose of the royalty discussion?
Yes, they will be.
Okay, thank you. That's all.
Thank you. The next question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. Just continuing on the royalty, which seems to be the favorite subject today. What is the reason for doing it now? Could you share some thought process behind that? And secondly, what is the reason for disclosing it, if it's not finalized, just to sort of understand the full background to the subject?
See, it was in the discussion mode for a long time. So whenever it materialized, we shared it. So there is nothing particular about now which makes it a wrong time to inform. The moment we sent it to the board and the board discussed it, we shared it.
So the argument for reducing the royalty, so what is the argument for reducing it? Is it because the R&D content of India is rising sharply? Is that the key argument here?
No, it was a pending discussion for a long time. We had to find a way of figuring out how should new models be treated, what is the right level of royalty that should be paid. So it was in discussion. And in any negotiation, there are always arguments for and against the figures.
Okay. And any timeline by which we'll get the next update? Like what is the typical, how does the process work from here on?
It should happen in due course. As and when we get the details, we will share with you.
Okay. And my second question is on the pricing side. If we notice the price hike that you took at the start of the year, fairly moderate. So, given the fact that you have a lot of waiting period across key models, should we expect better pricing power through the coming year from Maruti? And also, if you could quantify what exactly is the commodity hit, has it been fully passed on or is there more headwind to come?
Well, it is always Maruti's policy that, whatever little bit of fluctuation happens, in terms of input costs and all, we do not pass it on to the customer and try to stay always customer friendly. So idea is that not to really, overcharge the customer in case there is a waiting. We maintain a balanced approach. And in view of that, whatever basic minimum price increase was necessitated because of the input costs, we had to actually, pass it on to the customer. Now, regarding commodity prices, I'll request Mr. Seth to take it forward. So commodities have been hardening. Some impact of this is visible in the third quarter results as well. But I think we will have some more impact going forward, as a lot of commodities have since moved up. So commodities we'll have to watch in terms of where they're heading, and certainly in Q4 there will be an impact of commodity. Our endeavor is how much can we set it off against our cost reduction programs, and we'll work on a more stretched basis to either reduce the impact or make it zero. But certainly commodities are pain point at this point in time.
Great. Thanks. I'll come back in the queue.
Thank you. The next question from the line of Sonal Gupta from UBS Securities. Please go ahead.
Yeah, hi. Thanks for taking my question. So just wanted to ask, one is, could you share the export revenues for the quarter? Yeah.
Export revenues for the quarter are at 1,430 crores, 1,430 crores.
1,430 crores. And what would be the average price increase you've taken from January?
Average price increase in January would be what? Less than 1%? Less than 1%. I think it would be about 0.745 or thereabouts.
Okay. And just lastly, I mean, how much is now the share of government employees in your sales? I mean,
Sonal, let us, in this financial year, it is a little about 20%. It keeps on varying, but 21, 22, but largely you can consider about 20%.
Okay, thanks. I'll join back the queue. Thank you.
Thank you. The next question is from the line of Chirag Shah from Edelweiss. Please go ahead.
Thanks for the opportunity and congrats for good set of numbers. So my first question is on Gujarat plant. What would be the YTD production at Gujarat plant for, if you can share?
95,000 so far, YTD.
95,000. And
yeah.
Sir, so if the demand growth is in double digit for next year, you are reasonably confident of meeting them at least around low double digits. That's the right way of looking at it? If the production is aligned for a reasonable 10-12% kind of volume growth in the system,
we should be able to meet. Chirag, currently we are in a budgeting process. We are evaluating all possible option and to meet the demand for the next year. Once we finalize our numbers, we'll share with you.
And one last question, if I can, on the commodities, is it possible to quantify what kind of impact we would have seen in this quarter and also in last 6 odd months, as well as on the currency side, how the currency, because yen has been appreciating reasonably of late?
Currency is more or less neutral. If you compare Q2 and Q3, there's hardly any impact, not much impact. But on commodities, so far we would have had about 30 basis point impact on account of increase in commodities. As I mentioned to you, that there is more pain in moving forward. So you will therefore see higher impact in on the account of commodities in Q4.
And we would have some impact even in Q2 on the commodities, right, sir?
Q2 was negligible.
It was negligible.
Because there's a lag effect, so Q2 was negligible.
No. So a large part of impact is yet to come.
Yeah.
Great, sir. Thank you and all the best, sir.
Thank you. The next question is from the line of Basudev Banerjee from Ambit Capital. Please go ahead.
Yeah, thanks, sir, for taking my question. Couple of things. If I see your sequential ASPs have improved, whereas price hikes happened from December, and this quarter mix also was not significantly better. So can you explain that?
Realizations have improved largely on the back of higher sales of certain higher value models. So that proportion has increased, and therefore realizations are on that count better. And what was the second part of the question?
So any element of unsustainability in that kind of mix per se?
Well, I think that mix is pretty much sustainable over the next 12 months or so. So we don't see any this thing. But in terms of now realization, if you were to compare now, it's more or less stabilized. So you may not see that kind of a jump moving forward in terms of realizations.
Sure. And second question, sir, if you can highlight the impact of cost reduction initiatives, because absolute quantum of other expenses like lowest in last 4 quarters, whereas volumes are decently higher. So if you can explain the quantum of benefits you got.
So cost reduction has many elements in it. There's cost reduction on account of value engineering, value analysis, etc., standardization, inner part localization. So variety of things. I think all this in a blended way gets embedded in the material cost to net sales ratio. This quarter we had been able to offset the increase in commodities and the other increase that we saw in some other crude price, etc., through our cost reduction effort. So whatever increase that we had in commodities, etc., we were able to more than offset through cost reduction efforts.
But it can't get quantified per se.
I mean, we don't share the individual details in terms of how much is on one account ever. So I can only say that that we have been able to do more on cost reduction than the increase in the area of commodities and other parts.
Sure.
And that's where you see that impact on material cost to net sales ratio in spite of higher sales promotion cost.
And sir, like every quarter you share the diesel volume. How much?
Diesel volumes we can share with you. Diesel volumes. How much are these? 1,13,948 diesel volumes.
Okay, sir. Thanks. That's all from my side.
Thank you. The next question from the line of Kapil Singh from Nomura Securities. Please go ahead.
Yeah, hi, sir. Sir, is there any timeline you can share on third and fourth line for the Gujarat plant? Anything that you have in mind?
No, Kapil. At this point of time, we just have a understanding that the third line decision about third line has been taken, but the exact timings we will inform you later.
Okay. And on this royalty agreement, whenever this gets finalized, this will be from retrospective effect or prospective?
So all new models starting the Ignis, and the Ignis was launched in January 17.
Yeah.
So all new model agreements, as and when the new model starts, the first of these models started in January 17.
Okay. So from Jan 17 onwards, we will get some revised calculation.
Yes.
Okay. Okay. And also on the tax rate, sir, wanted to check. It's a bit high because of lower other income. So what is the full year guidance going ahead?
Yeah, one of course is because of lower other income. The second, there were two benefits we had last year. One was investment allowance, so that's gone away. And second was R&D was at 200%, now it's at 150. So therefore there's this increase. I think effectively the rate that you see now should be the rate going forward.
Okay. Okay. And lastly, on the footfalls, what kind of demand momentum on footfall growth are we seeing currently?
Footfall growth. Well, the inquiry growth is quite robust, and we are, the same if we see year on year, there is about 20% increase in the inquiries.
Okay, that's good. Right. Thanks. That's very helpful. Thank you.
Thank you. The next question from the line of Pramod Amte from CIMB. Please go ahead.
Yeah, hi. With the new Swift coming on board, where you plan to produce it, and what will be the product mix for Gujarat plant? And
Sorry, could you repeat your question?
New Swift, where are we going to produce it, and what will be the product mix in Gujarat plant? Well, the new Swift is going to be produced in Gujarat, and currently Baleno is also being produced there. So that is our product mix.
And does that release you some capacity for your waiting products like Baleno or even the Vitara Brezza? And can you indicate how much the capacity is going up? Some indication of the same.
Certainly, the announcement of this in production capacity at SMG Gujarat, it supplements our production from Gujarat as well as Manesar. So we will be producing about 150,000 vehicles from SMG this year, and next year would be full year of double shift production, and our capacity there is 250,000 per annum. So that's how we are planning it.
Yeah. Thanks and all the best.
Thank you. The next question is from the line of S. Natraj from Quantum Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just wanted to touch on a couple of issues. So can you just touch on your expansion plans and your capex in terms of, we hear news of you buying real estate for your distribution and that being either capitalized or whatever. So how do you look at the long-term capex? I mean, I'm looking way beyond 1 year. So how do you tie your investment in capex plans and distribution plans, and how should we model it? That's question number one. And two, obviously, is the we had indicated when the Gujarat plant would start production, the cost of manufacturing at the Gujarat plant will be almost similar to that of Maruti Suzuki's current production cost once it kind of reaches a maturity. So when do you think that cost structure that the Gujarat plant will reach compared to what we have now? Thank you.
So capex plans are worked out each year, and of course we have a roadmap for what real estate, etc. we'll be investing on. This year we will be investing about 800 crores on acquiring properties or land, and then similar numbers are being worked out for future as well in terms of overall properties and locations that we will be acquiring land in. So that's broadly the plan. And in terms of future capex requirements, it will be largely linked to new products. It will be linked to our R&D facilities, our routine annual capex, etc. So that's the area where we'll be spending, because capacity expansion per se would be done by Gujarat, and that's what they would be spending on. So that's broadly on the capex side. On the other question, as we had mentioned that over the next few years, most of our vendors will eventually move to Gujarat, and obviously when you scale up and when you are under full capacity utilization, the parameters would be quite measurable with the current parameters of what we have in our own plants. Okay.
Just to follow up on two follow-ups. When do you think that would be based on 2021 or much earlier? And
we have a timeline of about 3 to 4 years in which the localization would get completed.
Okay, sounds good. And just to follow up on the capex and investments, so if this is the guidance in the long term, directionally speaking, the Maruti cash balances will go up really substantially. What is your? I know that you have stepped up your dividend plans recently. What is your longer term? I mean, looking beyond a couple of years, what will be your long term ambitions? What do you expect to do with that cash?
I think there is so much action in the industry at this point in time, and there's so much more that's required to be done moving forward. So one will have to again work out in terms of what the priorities are. One is talking about electric vehicles and so many other things. So there will be a lot of investments that one will be required to make in future. So it's too early to say that excess cash or utilization. I think we are working on it in terms of what are the priority areas, how much money is required to be invested in what all areas, and of course we will revert from time to time in terms of telling you that what is the effective utilization of cash and also productively where is it going in business.
Sure, much appreciated. Thank you very much. All the best.
Thank you. We have the next question from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity and congratulations on a very robust set of numbers. My first question pertains to the vendor localization bit, sir. You did mention that it takes around 3 to 4 years, but if you can just help us understand what percentage of the current sourcing of Gujarat is kind of localized, and what percentage you would ideally like it to be? Because if I'm not wrong, for your existing plants, you have localization or co-location of vendors which is close to 90%. So how would you look at the Gujarat 3 years from now?
See, we would be currently at about 15 odd percent, and we are scaling up. Basically, you also have to ensure that all the heavy material is first localized and then the other bit. So we are working on a plan accordingly. We believe that in about 4 years we should be at least 60 to 70% localized in Gujarat.
So that would entail a meaningful reduction in logistic costs and.
Absolutely, yes. Yes, absolutely.
So, okay, that in a way probably secures the near-term, the kind of margin range you are operating at with EBIT margins of around excess of 12%, what you have for this quarter with not so great volumes. So, and depreciation has already started to kind of stabilize in absolute terms and probably declining in the next few quarters. So is it fair to assume that this record margin levels of 12% can be kind of sustained unless there is some really big change in the market, in the industry structure or something like that?
There are so many variables in the business that it is very difficult to predict. These are some of the positives that we are talking about. But at any point in time, you have so many surprises that keeps spurring up. So I think we'll have to take a call based on what the situation is at a given point in time, where the industry is moving, how the product mix is moving, what are the commodity prices, and so on and so forth. So it's very difficult to give a sustainable number to a margin. But our efforts would always be to ensure that we do our best in whatever parameters that we are working on to give best to the shareholders.
Excellent. And the second question pertains to the electrification plan. So we did hear a recent media interaction where the CEO did say that you are looking at sourcing of lithium ore from either Latin America or some of the other continents, which implies that you will be manufacturing the lithium cells yourself, which is probably a first for any Indian company as far as electric vehicle goes. So if you can just share how this progress of that joint venture between Suzuki, Toshiba and Denso is progressing, and when, if any timeline, if you can provide as to when the first battery will roll out from that joint venture, which probably could support a reasonably strong hybrid from your side.
Thanks, Pramod, for that. Our lithium-ion plant, the Suzuki Toshiba Denso joint venture plant, should be rolling out its first battery in the year 2020. And it would be manufacturing both battery and cells.
Yep.
Of course, as of now, we have not been able to locate lithium and other metals in India. And we are taking our parents' help, including Toyota's help, to secure lithium supplies from wherever in the world it is most appropriate, wherever it is most appropriate. So I think it's a very dynamic situation. It will keep evolving, and we have to keep learning and exploring all the time.
And Rahul-san, on that point, recently Toyota invested I think few $100 million in Australian mine. So is Suzuki and Maruti, given the balance sheet strength, what you have and the kind of free cash flow you're generating, and the fact that capex on your books is going down, or at least on the production side is going to be not so great. So is there a thought that you would like to kind of secure the supply as well and do something on the lines of what Toyota did?
As of now, we have not thought to this extent. There may be some thoughts which Toyota Japan and Suzuki Japan might be exploring. Nothing in our mind as of now.
Thank you. The next question is from the line of Vivek Geta from HSBC. Please go ahead.
Hi, sir. Yogesh here. Just a couple of questions. Firstly, on dealer profitability. Last couple of quarters, some of them may have been impacted by GST, and then the insurance profits have come down as well. Is that margin risk for you in case you'll have to, increase the dealer margins in the coming days?
Well, we do monitor our dealers' profitability on an ongoing basis, and we have a this department here which continuously visits dealers and understands their revenue streams and their expenditures. So one is that we are working in a big way towards productivity enhancement at the dealerships. We are making our showrooms digitally equipped and providing tablets etc. to all our dealer sales executives so that their productivity goes up. Similar activities we are doing at the service front as well. And as far as insurance revenues are concerned, I don't think so there is any change. There was a 15% cap earlier by IRDA, and the same cap continues. And dealers, in fact, they continue to get their insurance margins. So there is no concern on that front. Particularly, the upward movement of the ticket size of the vehicles also helps dealers in making more money per vehicle, and the models being in the waiting, the discounting schemes are very relatively conservative. So all these factors put together are helping our dealers towards a robust financial health.
Okay, that's good. So, Mr. Kalsi, also any update on Arena? How is it progressing, and has it helped your customer demand?
Well, till date we have launched 30 Arena channels, and another 32 would be launched within this fiscal year. And then moving forward, we have a plan, and over next say 2 years time, we intend to convert 100% of our showrooms to Arena. The customer feedback has been just big delight. Customers who are visiting these showrooms, they are just saying very happy about it, particularly when we are aligning these showrooms with online, offline, and then back to online experience with the customer. So whatever research customer has done online, he fixes an appointment with the dealership from there. And our dealer sales executive can really understand that up to what level he has done the research, what models he has shortlisted, and from there he takes him forward offline. So it's a great experience for the customers, and I think our inquiry to retail, this thing time is, getting compressed with this kind of, technology enablement at our dealerships.
Thank you. We have the next question from the line of Jatin Chawla from Credit Suisse. Please go ahead.
Yeah, hi, good evening, sir. Thanks for the opportunity. The question was on the other income side, where clearly with the bond yields moving, we've seen this has come down sharply compared to the last quarter. How do we think about this going forward? Is it going to remain very volatile, or once you start reaching the third year in terms of your FFP maturing, then it starts kind of stabilizing at a certain level?
Jatin, the entire portfolio for us is invested into debt mutual funds under various categories, and every quarter this will be subject to interest rate movements. Now, over the last 1 year, the interest rates on account of GSEC and government bonds were actually coming down, and therefore our returns were quite robust. But off late in this year, the interest rates have actually been going up for various reasons, with the worry of fiscal deficit slippage, etc., crude prices going up. So every quarter you have to do a mark to market, and in previous years we had actually capital gains accruing while doing mark to markets, and we had taken that into account. This year in this quarter we had significant capital loss because interest rates went up by almost 56 basis points. So that results in a capital loss, and therefore you have to mark to market. But these are notional.